Okay, so in presentation number 1, we looked at the overall introduction. For those of you who haven't watched it, my name is Mark Fielding-Pritchard. I am senior partner in our little practice, which employs 9 people, called ME Fieldings. And we are specialists in IPSAS and IFRS implementation. The purpose of this course, and when I say this course, I mean the overall course, is to provide not just a normal look at the individual standards, but to say what are the particular issues that you will have as an implementor. And so therefore we're concentrating not on the standards, because there's 1,001 websites that look at IFRS and IPSAS standards, but actual implementation issues. So your standards will give you your point B, where do you want to go to, they will give you your disclosure requirements and so on. And we're going to focus more on making sure that you get the setup of your team right, and then the issues that team are going to go through as they go on. Really what the title of this section is called is about how to deal with your client. You're dealing with a government. Your government probably doesn't have any experience of this, though they may. I was very lucky in Kazakhstan because I'd already worked on IFRS implementation, and I worked with the same team of people. So they put together the same team of government employees to run the thing with me. So they may have considerable experience. More likely though, working in places like Kyrgyzstan and even in some Western countries, they have no experience. So what are we going to look at? The reason that this is important is because, as I stated during the introduction session to class number 1, what often happens is that people planning this in the government, when they're looking at bringing in foreign specialists, they'll bring in lots and lots of very highly qualified, very highly paid IPSAS specialists, but those people don't have the knowledge about what actually exists in the government already. So what is the existing system? In terms of going from point A to point B, they know everything about point B, but they know nothing about point A. And you have to have enough money and enough resources to understand what's a point A. It sounds very obvious, but trying to find someone, 1 or 2 people who know everything about how the purchasing system, how the revenue system, how the HR system works, very, very difficult. Secondly, you don't just chuck bits of paper in a magic box and out come your IPSAS accounts. Your ERP system has to be able to convert one to the other, and that's the other big area. So we're looking now at this stage where, in the first section we looked at how to persuade people, what are the key points and why do you want to do this, and now we're dealing with these people. These people are probably going to be smart enough, and these people, we mean the client staff, are probably going to be smart enough to have some idea of what IFRS is in particular. Certainly in places that I've worked, the heads of departments tend to have done things like the ACCA diploma as well. So they'll know what is the standard on PPE, they'll know what is the standard on leases. Now they're coming in from IPSAS. IPSAS is very, very slightly different. So what are the 4 main areas that we have that you need to make them aware of, and that your implementation team needs to understand as well? Bearing in mind, if you are a foreign consultant, you're going to go in and you're probably going to have to do some training before you even start with the people who are going to be working with you on implementation. The first thing that we have is the framework. The framework is massively important. The framework really, really suffers in real life because it's just as boring as hell to read. When students look at doing accounting, ACCA and so on, they're always keen to do consolidation, and they'll do PP&E and leases, and maybe even if they can learn the layouts of the formulas and stuff, the pensions. No one ever wants to read the framework because it's so dull. But you have to read it. You absolutely have to, because 99 transactions out of 100 that you're trying to deal with, there won't be a standard for them, or the standard won't be clear. So you need to go back to first principles. So we have this idea of a framework. Now the IPSAS framework's a little bit difficult because it's only in the process of being issued now. I actually wrote the book for SIPFA, the UK Institute for Public Finance Accountants. I actually wrote their book on this, and the issue of the IPSAS framework has been divided into 4 sections, so parts 1, 2, 3 and 4. It's only so far part 1 that's actually been issued, so part 2, 3 and 4 have still not been issued. Having said that, you can probably conclude that they're, at this stage, now I'm writing this in March 2014, you can probably conclude that they're not going to materially change. Or you can do what you do all the way through and use the IFRS one. But it's very, very broadly similar. there's nothing in there about materiality anymore, nothing in there about substance over form, which is a bit of a shame, because materiality and substance over form are two things that are going to give you big, big problems as an implementer. So you've got the framework. You have to make sure that at least that your implementing team have an idea of the framework, and not just the words in it, but the flavour of it as well. Because when you go to some of these countries, they're auditing to documentary proof. And if you're making provisions, you don't have documentary proof. Even if you're accruing electricity, unless they're going to wait until the bill comes in and then make the accrual from the bill when it comes in, who knows what they're going to do. So this concept of making normal accounting estimates, these concepts of materiality, you go to countries that had really complicated asset disposal rules, and people didn't dispose of assets. So you find that you've got schools that have got thousands and thousands of dollars worth of crayons in their balance sheet. But those crayons don't exist anymore. The kids have smashed them and used them years ago. So this idea of IPSAS being something that brings in professional judgment, and that when you've got your supreme audit body coming in, just because there isn't a document that backs it up doesn't mean that it's wrong. Let's look at it in terms of reasonableness. The next thing that you're going to be asked for is to give monetary value of reasonableness. These are conversations that your team's going to have, and it's so important that you get there, because if the auditors refuse to swallow that, you're kind of dead in the water. So we're starting with the framework, not an easy thing to start with because it hasn't been written yet. In real life, probably the most important document that you will have will be the framework, because you're going to go back and back and back to first principles, and you have to get the people around you to understand what that thing is and what it's about. Go through it line by line. You should have gone through 3 or 4 copies of that thing by the end of implementation, because you're going to use it so much. Okay, that's the framework. The next set of documents, because we've got 4 here, the first 4 on our slide. The next kind of set of documents are the disclosure documents. IPSAS 1 and 2, and you've also kind of got the disclosure requirements which come with each individual standard. So what is it, excuse me, that we're actually going to be disclosing? This is actually, in terms of implementation, it's kind of much more straightforward. As a first step, most countries, and bearing in mind that your country is going to produce local standards, they will produce local standards that very, very closely mirror IPSAS 1 and 2. That's normally what they do. And then as they go through it and actually begin to understand what's in it, and there will be things that they don't want to disclose. Assets and liabilities of the Ministry of Defence, for example. Certainly assets that the Ministry of Defence keeps overseas, they won't want to disclose. So, but your IPSAS 1 and 2 are fairly nice documents. You can give it to them, people will read them, and they're interesting. So people will read them, and usually you'll end up having a couple of days training on them. Just go through what all the different things are. Superannuation, which of course is pensions and so on. Please, please, please remember that you must download the book that goes with this course, because it has extra information in it. And in there I've put, later on in the course, there's the income statement. I have to get my words right. There is the statement of financial performance and the statement of financial position and the cash flow, still cash flow, for Australia. Australia is a very good one. So you can get a full set of accounts, which is 100 pages, and just spend a couple of days going through the main clients with it, so that they can see what's going to be in there, so that the financial accounting group understands exactly what it is that they're doing and exactly what it is that they're recording, or that they're disclosing. And that's quite interesting. I've done it a few times with various clients in the past as a nice little introduction, and you'll find that goes pretty well. As I said, get it up to them nice and early. Get those standards to them right up front. They'll read them, yeah, that's fine, and then suddenly 6 months later, oh, can't do that. Oh, can't do that. Well, that has to be missed. That has to be missed out. So, we don't want to disclose leases for the Ministry of Defence. So, make people aware as well by note. You have to get down to that level of detail. But as I said, it's quite good fun to do. Right, so you've got your framework, which is not fun, but you have to do a lot on. Your disclosure, which is generally easier. And also if you're putting in Oracle or SAP now, you'll find that they'll produce reports that mirror those things anyway, and you don't have to pay extra for them because they're standard deliverable reports for the system. Number 3. again, these are the ones that are going to give you hopefully not too much problem in terms of dealing with the clients. If you're dealing with an accounting function in almost any country in the world, brilliant work that's been done by ACCA, you'll find that at least one of them is either ACCA qualified, has got an ACCA diploma, and so therefore the client staff will know what is foreign currency. They will know what is things like property, plant and equipment, and so they'll know the basics of it, and they'll be able to help you as well. You can probably get the local staff to run big chunks of the training for you. I've put consolidation on there. Consolidation wasn't a very good choice. If you think about what most clients expect when you go to see them, they expect that what you're really giving them is a glorified box of Lego. So in other words, if you go to a school, you can click a button and the school will produce a set of accounts, which will be IPSAS. If you then widen your search range, it will produce all the schools in the area, which will consolidate up to the local education authority, which will consolidate up to national, then ministry, blah blah blah, and so we get this this kind of honeycomb system where you can just keep consolidating. The reality of it is that you can't in any country in the world. I don't think. Certainly you can't do it in Britain, and you won't be able to do it in any of the recent adopters. The way that the system works is that you start with the national cash accounts that they produced before, and then you put in the rest of the information. So you put in your asset information, you put in any accruals, prepayments, you put in your financial instruments, and so you build the thing like a constructor where you start with cash accounts and then you bolt on the changes. So we get these IPSAS which mirror IFRS, foreign currency again, and these ones won't, in my experience, they won't give you any great problem because the local staff will know what they are. The final set that you get here are the ones which are government specific. I've included the impairment of non-cash generating assets. I don't think that standard actually is specific. I think that standard is a standard which is open to pretty much everyone. So it's included in IFRS. But it's much more relevant for governments. Governments are much more likely to have lying around assets which don't generate cash. And they tend to be impaired not because of physical damage, but because they were designed to produce vast numbers of licenses, or driving licenses is what I've seen in real life, or another designed to produce vast numbers of shirts or something, and then we don't need these things. So anyway, back to it. Government specific, the ones which are probably going to generate the most excitement is going to be IPSAS 22 and 24, which is your whole of government declaration and then your budget information standards. Those two standards, because it's not really obvious what goes in them. So what will happen therefore is that the client will come to you and say, well, what do I actually put in these statements? Certainly for the whole of government one, and then because you're a foreigner who's coming into a country, you may not actually know. So on that point, therefore, this is important when you get your local staff and they have the local knowledge. Again, in places like Kazakhstan, I was lucky because I worked there for a number of years, so I was able to add value. But if you're just going into a country for 6 months, it'll be difficult. So you need to get as good as sources of information as you can to help them with the general government sector. And they'll have an information department that's going to want to look at that as well. So they need to be aware of what's in that, so that they can make sure that the information matches government strategy. For the budget information as well, there's supposed to be a comparison of your budgets, which are your final budgets, with what's actually been spent. The problem there will be that the account codes in the budget don't match the account codes, but you may be able to do something. What will happen there again is that you need to get that into people's minds early on, that they need to do these things. How is it that they're going to cope with it? It's not really good if you're adopting all of the really hard IPSAS, like assets and leases, and then the ones which are more subjective, you're going to miss out because you don't know what to do. So just to recap on that slide, therefore, you've got the 4 different types of IPSAS, or the 4 different types of information which you have. The framework isn't actually an IPSAS, but you've got the framework, so make sure that that's hammered home to people, that when they're making decisions on accounting transactions, they're taking into account the right things. Disclosure ones they can read for themselves, and then you'll find as people get more and more comfortable with the process, that they'll begin to change that. The third ones don't generally give you a problem because there are always people there that understand what these things are about. So there's really not that much to tell them. And then the fourth ones will be harder because they're more subjective. Again, we come back to this idea that people in governments and developing countries tend not to have this idea of being able to express their own opinions or being able to put forward a professional judgment. Everything is based on provable facts. So those are your four areas. You should divide them up and be aware of them, but it'll become clear over time anyway. But the thing is that you do have to have a different approach for all the different four. The old kind of nutcracker, one size fits all, just doesn't kind of work here. One final thing to say, enormous thank you to the people at IFAC. IFAC are the people who produce IPSAS, which I hope everybody knows. If you want copies of IPSAS, if you want copies of any of the documents that they produce whatsoever, then you go to the website. This is a video, so I can't put a hyperlink in, but you can copy the addresses. If you just Google IFAC publications, and it's a handbook from the IPSAS board, IPSAS B, and you'll get the thing. And everything there is free, and they're just the nicest bunch of people ever. They do everything they possibly can to help you, and they'll start to correspond with you. And the only thing is they may ask for stuff back, because that's considered to be a bad thing. Okay, we started with the introduction, the history of IPSAS, and why we're doing it, and what the benefits are of IPSAS. Now we've moved into presentation number 2. Now what we're really looking at is dealing with the client now. So now we're getting to this kind of idea that, okay, we've persuaded them to start. Now we've persuaded them to start, what's happening next? So in terms of just lining them up and starting to give them information and stuff, these are the different types of IPSAS and the ones that you should be aware of. Get all of this stuff up front though, and get them dealing with the IPSAS as soon as possible, because you need them to get comfortable with the standards and what they actually involve. So just to give you an example, when I first went to a client in one country, I went in and they took me into a big empty room, and I said, oh great, this is good, what's it for? And they said, oh, this is for the IPSAS equipment, and their impression was that there was going to be actual physical machinery involved in this process. There isn't, of course. Right, let's move on to the next slide. In terms of dealing with the client, therefore, you certainly hope that the country will have done some form of a feasibility study to decide whether or not that it's worthwhile to do. You may actually find in many countries that it isn't, that the feasibility study shows that it's not, because of the level of education, because of the level of infrastructure. Just because the country just isn't that bothered, they're just quite happy with their decision-making process. When you're doing your feasibility study, and therefore as part of the feasibility study, it's going through your mind as well with your client about what kind of is it that we should be doing here. Make sure that you're gathering information, and the aim of the process is to provide a tool which gives them the best possible information that they can get. IPSAS is a tool to achieve that. So the aim is an accounting system that accurately reflects what's actually happening in the country, and produces information that is useful for decision making. The aim is not to adopt IPSAS. It's a little bit of a disadvantage that some organisations like the World Bank put great pressure on countries to adopt IPSAS. It's good because they should do it, but it's not so good because then adopting IPSAS becomes a box to tick so that they can get access to capital, rather than what they really should be doing, which is sitting down and thinking in a much more broader view, what does everybody need to know from the system. So I'm really keen on that, and as I go through this, I tend not to try and talk even about IPSAS themselves, but I tend to talk about the new accounting system, because that's so important. In terms of what the result is as well with IPSAS, please remember that there are two different types. We always focus on accruals because I genuinely believe that accruals is better than cash. I think it gives you better quality of information. But for a country, there is no point in trying to make the enormous leap to accrual accounting if you really have very little chance of ever getting there. Certainly with Standard 17 at the moment, which is PP&E, property, plant and equipment, you get a 5-year time period, and during those 5 years, you can catch up with your assets, you can get them valued and identified and entered into your ERP. For some countries, 5 years is just not long enough. For some countries which are relatively poor but have lots of minerals, They're not even going to raise the money within 5 years to do the full process. And so if you've got countries like that, it's worthwhile getting that process starting to move, so they're getting their land surveyed to see whether there's oil, to see whether there's metals or whatever. And at the same time, you can start introducing as a sideline other parts of accrual accounting. So the existing physical assets that you've got, you can measure and at least put them in at original cost. You can start to bring in some accruals and prepayments. You've obviously got a centre bank that's going to have some form of financial instruments, so you can start to bring those ones in as well. The summary of all that, therefore, is that with those countries, it's much better to start going for cash. So this is what we did in Kyrgyzstan, for example. So you push for cash, yeah, because cash at least is a couple of steps along the road, and it gets them into the mentality of changing things. It gets them into the mentality of improving things. And then once you've got the momentum, that momentum will carry them forward. So do look at cash, though I have to say that the general push in the world is to go to accruals. And certainly once you start to get to the kind of mid-level countries, Kazakhstan has now become, down South America, Argentina, some of the wealthier African countries, places like Senegal and so on, you can start to think about the move to full accrual accounting. Okay? Having made the decision that yes, we're going to go to IPSAS, then the question is what is included under IPSAS and what is not included under IPSAS, because IPSAS won't be applicable for everything. So it says in the top line there, IPSAS is usually applied to non-commercial organisations. So within the government, you have a standard non-commercial organisation, so a library, something like that. That is a steadfast, solid, stereotype IPSAS kind of project. Right, what do you do when you have when you have organisations where you have mainly government money, but you have some external money as well? Usually in those kind of situations, you'll want to include IPSAS as well. So we try and keep IPSAS as much as possible. If you have pure organisations which sell goods, so you have like government bookshops and government statistics shops, and all they do is provide books and statistics for the general public, usually we would keep those sides out. Usually we would keep those companies out. So therefore, they would usually use IFRS. It's normal as well for centre banks to use IFRS as well. Now the problems that we get therefore is how do we consolidate these two things? Sorry, it actually gives us two problems. The first one is how do we consolidate? And things like centre banks are big problems at the moment because IFRS is many years ahead of IPSAS in terms of financial instruments. So the question therefore is what are you going to do with your financial instruments? Are you going to restate them back to the old rules, or are you going to keep them at the IFRS rules? What most countries do is that because they've actually not adopted IPSAS, they've adopted national standards, they make the financial instruments the same as the IFRS. The other thing as well is that IPSAS will go to those IFRS standards for financial instruments probably in 2 or 3 years. They keep holding off because of the issues, but they'll go there. So when they're there, you're there ahead. The bottom line is that I can't tell you what the answer is for all of this stuff. You need to sit down with a flow chart, which is the structure of your government, and work out for each individual organisation what's going to be included and what's not. If you don't have the resources for that, you have to design a decision tree, and then the individual ministries will tell you what goes in and what comes out. But things like universities, for example, where half the students are paid by the government and half are fee paying, they're going to give you issues, and you have to try and work those things out. Gave you a little example there. So it says the National Child Act states that we've had this in several countries, can have 25 children in a class of which 17 must be state funding. Schools will always do as much as they can to maximise the number of fee-paying kids to get the money in. And how do we account for the $1,600 a month? Right, the $1,600 a month therefore is 8 students at $200 a month. What's happening here therefore is that 95% of their revenue will be in the form of government provided revenue, simply because all the money for the building, all the money for the playing fields, and the money for the 17 kids themselves, which in most countries they will feed them as well, will come in. So $1,600 a month is going to be an immaterial sum. Therefore, you'll include it as under IPSAS. I certainly don't ever recommend that you can split a business in two and have half of it under IFRS or under IPSAS. So here, because it's such a small sum of money compared to the total, it would go under IPSAS. But once again, these are the kind of decisions that you're going to get drawn into, and you're going to have to be ready to make decisions and justify them. So slide number 4 here is talking further about this idea of what should be included under IPSAS. And what we said is you need to get a split of the government sector. So what are the different organisations? So I think we've taken here some Ministry of Education as a target. At the very top we have the Ministry of Finance. The Ministry of Finance is at the top because it collects all the tax revenue and therefore it divides the money out between the different ministries as per the state budget. You have to look and see how the money moves as well. Here we've just assumed that it's a simple cascade process. So the Ministry of Finance therefore gives the entire budget to the Ministry of Education. The Ministry of Education will then split on some basis, possibly geographically, possibly on different types of organisation. So you've got kindergartens, you've got primary schools, you've got secondary schools, you've got universities, you've got colleges and so on. But they will have some way of splitting the money across different sectors, and then that money will get split and split again. You have to remember as well that most countries will have some form of federal budget and they'll have regional budgets as well. So therefore, when you're looking at these things, you need to look at where the money's coming from. Because when you introduce IPSAS, we're talking mainly so far about all of government accounts. So what are the national statements? But a school itself will want to prepare its own set of accounts. And so therefore, when you do your ERP system, the school will go in, they will get money. So the money presumably will come some from the local education authority, some may come nationally, some may come from fees earned from providing fee places, or from other ways of making money, and so on. With the school, it's fairly straightforward. That school is going to be under IPSAS, but it may not be so clear under other circumstances, under other models. If you have Ministry of Education training, for example, so they train teachers. Some teachers may be government funded, some may be private. So we come back to this idea. It's very, very important that you do this, though, because this will explain to you so much more than just where we're going to use IPSAS. It will also show you how the money is divided out and therefore what the transactions are. Bearing in mind that when you prepare your sets of accounts, if you have the Ministry of Education at the top and it pays money down to Department of Education in the city of ABC, it'll have an expense, which is the money coming out, it being Ministry of Education, and then Department of Education in city of ABC will have income, and it's the money coming in. So you're going to get this cascade effect with your income and your expenses all the way through. And then of course that will have to be declared as income and declared as expenses to say what these things are. And then you'll have your performance indicators. How many children did we teach? How many people automatically qualified for university? How many got scholarships? Blah, blah, blah. Whatever these things are. Right, I hope that's clear. We're looking here at two things. We've got a structure of the education. The first thing that you're looking at is what is included under IPSAS and what is not. And that's a decision to be made. Secondly, it's so important that you get this structure because you need to understand who's going to be preparing accounts and who isn't. So where is the entity itself? Okay? Right, so now what's the final slide for this little section is IPSAS, what is the result? It says in the slide, and you can read this, IPSAS will therefore be applied to the individual ministries, agencies, etc. So when we use this word applied, what's happened is that an individual department or whatever will be set up as what they call it in the accounting standards as an entity, and the entity will therefore prepare sets of accounts for itself. In general, you're looking for an individual legal entity. The standards talk about entities which are allowed to enter into contracts in their own right. But what these entities are will usually in real life be driven by what's in the budget system. In addition to these individual entities, you're going to have the national accounts, and the national accounts are for the country as a whole. Irrespective of which ones these are, you're going to be taking chunks from their accounts. So your ERP is now going to be able to, for an individual ministry, identify separate levels of revenue, separate levels of expenses, and then we split those things out. The usual process, however, will still be to work on a cash basis. So we receive cash, we're spending cash. You start with those cash accounts. Your chart of accounts will have to be changed to give you the right information, and then you start putting in your accrual information. So your assets go in, so you'll take out simply the cost of purchases, and you'll put in your assets, you'll put in your leases, you put in your foreign currency transactions, and so on and so forth. So we have this bridge. We start with a cash basis, and then it will come across to our accounts. And the bridge is your transformation exercise. And you can probably do most of it, certainly to begin with, in an Excel spreadsheet. So the ultimate aim, of course, is to have that included in your ERP system. Okay, in that little session, what have we actually looked at, therefore? We're now getting to the point where we're starting to deal with the client. We've talked about feasibility studies, and you really have to have one of those to find out where your holes are going to be. We've talked about getting the client ready for the different types of standards, and then we've moved on to talk about where do we apply IPSAS and where do we not. So taking the budget legislation, looking at the entities in the budget legislation, and then saying these guys are going to prepare a set of accounts, and these ones over here are as well. And then we need to talk about, just as an overall topic so that we understand the process, your accounts are going to internally, on a short-term basis, stay on the cash basis, and then you're going to put the accruals and the additional information in later at the end. Okay, I hope you enjoyed that. You know all of it now. If you did enjoy that, please like us on Facebook and love us on YouTube. If you got any friends who you think this is interesting for, then tell us to come and speak. Tell them to come and speak to us. Tell them to come and watch the videos and so on and so forth. And if we can help any of you, please don't hesitate to get in contact. See you soon in number 3.